554 crores. So that gives you an idea of the scale that we have been able to create in this business, running over 12,500 cars, providing services across 109 cities across India, and concentrating on, focusing on two of the major segments of this chauffeur-driven business. So the two flavors are employee transportation and chauffeur-driven car rental services, which are also the prime, demand generators and revenue generators in the corporate segment, where the demand is more for a better quality of services, more consistent quality of services, more predictable quality of services, which we have able to create this kind of a scale with quality. In our business, if you don't have quality, you cannot create scale. So the prime foundation to create scale in this business is to get your quality in order first.
Well, it's been a pretty decent day. I would say quiet, but definitely markets holding up on their own. Let's take a look at where your key indices and broader markets are. It's a day where the Nifty has been largely range bound. Pretty much how most of this week has been, and not moving too much. The Bank Nifty also completely flattening out and losing its gains from yesterday. Let's quickly pull up the heat map just to give you a sense of what has worked in today's trade. And it's been more about the broader indices. It's been more about autos, especially two-wheelers. I think if there's one sector which has shown some signs of action today, it's all about the auto and specifically two-wheelers. Look at Bajaj Auto, up about 4.5%. Interesting Jeffrey's note out today, which talks about the two-wheeler space and breaks it all down. It also talks about how Ola Electric's market share has fallen, talks about how Bajaj Auto is looking in positive territory, and you've seen the stock move pretty sharply. Tata Motors doing fairly well, Hero Moto as well. I mean, TVS not on this list, but you will see the TVS stock after that UPS upgrade as well. So auto is one clear theme. If I were to look for another theme, actually tough. Even M&M is doing fine, by the way. Tough because it's a quiet kind of day with no real standout winners, save from this Bajaj Auto. Let's quickly pull up the top sectoral indices as well, and you will see that theme play out, where you have a slightly bearish tilt to the market. But on the winning side, autos like we talked about, everything else completely flat. So while you have the Nifty Auto up about 1%, nothing much moving off the sectors which are in the green. On the losing side, Nifty Realty once again bottom of the barrel, and we've seen this as a consistent trend. I just want to pull up the advanced decline ratios just to show you a picture of the broader markets and how that picture has weighed in, and very choppy, range-bound kind of day. You can see neck and neck between the advances and the declines. Right now, the declines are a little over that line. I think this is the market waiting for a trend, and perhaps some clarity will come once we hear from the Fed Chair, Jerome Powell, later today. Hersh, meanwhile, I would reckon that broader markets is where there is at least some buzz, stock specific. Nothing massively though, even the Nifty mid-cap, and we pull up the small cap as well. Not really moving too much. It's all about the individual stories.
Yes, absolutely. But mind you, Tamanna, within those, at least the SMID indices, have outperformed the Nifty overall up till now. So we've seen that bit of outperformance start to unwind maybe just a little bit, or flatten if not unwind, at least in trade today. So that's the one trend that's playing out. But even outside of that, there are quite a few buzzers, lesser than what generally we have, just given the kind of trend we've seen this month. There have been a ton of buzzers, but today slightly lesser. Let's take everyone through it. First off, if we can just pull up some buzzers on the back of brokerage notes, and there are quite a few, at least 3 to 4 buzzers on the back of brokerages. Let me first start off with TVS, the new launch, some positive notes, some positive cues coming through. Jefferies is constructive for 3% higher on that one. Zomato was up nearly 5, some tempering of those gains that we saw earlier in the day, now just up about 2.5%. Go Digit, again, Jefferies initiates coverage, constructive, stock up 2.5%. 24% return is what Jefferies sees, 420 being the target price on Go Digit. But let's switch focus to corporate announcements. Again, quite a few, but lesser than what has been the case. SEPC up 19%. Now, just in terms of contract execution, a 232 crore contract executed. Impact of that still need to fully see through, but nonetheless, the stock is up and away in trade. CDSL, 1:1 bonus. Buybacks have been, especially after the budget, have been order of the day, and CDSL seeing a 10% rise on the back of that 1:1 bonus. 24th August is the effective date, so last date to purchase is today if you want to be eligible for that bonus. Power Mech also on the back of bonus, if we can pull that up, 1:1 bonus to be considered, of course, for Power Mech, 10% higher on that one as well. Jain Irrigation, MOU with the Coffee Board, keeping the stock up 12.5% higher. Now, the other flavor of the month has been block deals. We've seen a plethora of them and continues. Blocks on Devyani, Tata Tech, keeping a couple of those stocks abuzz. We saw NIIT blocks yesterday, and on the back of that, the stock is up and away. Those blocks got absorbed very, very well. Nykaa's blocks also absorbed well, 8% higher again on Nykaa. GMR Airports had a few small blocks. Those got absorbed as well, 1.5% higher. We also saw other blocks, something like a Federal Bank saw some blocks in trade today. Some bit of pressure on the back of those, 1.6% lower. Ethos saw some blocks as well as Usha Martin. So a ton of these stocks in focus. We'll talk about some of them. We'll also talk about some themes, especially with regard to some of these block deals and bulk deals which are happening in the market. Back to you, Tom.
Okay, so the block deals I find particularly interesting because, if you have stake sales, typically you see pressure on those stock prices. But here it's quite the opposite. And even if I look at Kalyan as an outlier, because the promoter was buying in that case, and you had some marquee names come in, the rest have fared pretty well. Kalyan now coming off those highs, about 1% down. But look at Nykaa, for example, has had a pretty good day all through the day. Nykaa now about 8% up. Ambuja Cements is the other one where you had one block in place and off the gains, but still in positive territory. So these are some interesting stories panning out. The other part of it is, and I don't know if I talked about RailTel, but that was another astonishing piece that I found today. RailTel up 5.5%. Quite a tiny order that they've really got from UP Police. But nevertheless, they have done well. All right, let's, before we go across to our guest this morning, let's talk about sector of the day, which is auto companies, no doubt about that, especially two-wheelers. We've seen what's happened from Bajaj Auto to TVS to Hero Motor, all of them leading as top gainers. Let's go across to Puneet, who's giving us the bigger picture. Puneet, what's the trigger? Of course, that Jeffrey's note, but apart from that, what is really the reason why market is bullish on two-wheelers?
Well, especially, let's look at each player because TVS Motors is buzzing on the back of a new launch they did yesterday of the Jupiter 110. And the note today, very specific on by UBS, is very positive. They increased the target price to 3,200 rupees per share versus 3,000 earlier. Potential upside of roughly around 15 to 60%. Now, what they are saying is three key things in the report. The first one, that the new Jupiter is a significant upgrade from its predecessor, which was launched a decade ago. It has a lot more features at the same price, so it will be competing with the other peers as well, and the other, EV players as well, which are launched in the similar price range, such as the Ola S1, priced at just around 85,000. The other thing that they are mentioning is that the features cannot be replicated very easily by its peers in the short term and might give an edge to Jupiter going forward as well. The new model can also aid incremental sales of about 15 to 20,000 units per month. Currently, it does around 60 to 70,000 units. So the incremental sales will definitely be a boost. On an overall basis, about 2.5 lakh for the year is expected to be added. And they've increased their domestic volume forecast to 14% growth versus 11% earlier. They also mentioned that the company's brand new foray into a new EV, which is expected to launch in Q2, as well as the electric three-wheeler foray will be one of the key positives going forward. So that's for TVS specifically, the big trigger coming in from UBS.
Okay, so UBS, of course, is the trigger for TVS Motors, Bajaj Auto also on the back of notes, and Ola is a whole different story, which we'll come back to Puneet for in a second. But meanwhile, let me get the view from Brijesh Singh, Senior Technical Analyst of Opulent Investment Advisor. Brijesh, very good afternoon to you. And, before we get to your picks and indices, outlook, etc., let's just talk about the two-wheelers. And let's start with Bajaj Auto and TVS specifically on the charts.
So good afternoon, Tamanna. Regarding with first of all, I'll say that all the three stocks has been considered, whether that be TVS, Bajaj Auto, even the Hero Motor Corp has been considered. I'll go with first of all with the TVS. See, we look out the daily chart, weekly chart on all the time frame, even the hourly chart time frame. Still, everything is promising and it's heading towards the new highs also. Today's session, we have seen stocks making a new 50 high that was of 2,818 around. We have seen a gap up opening today, and still it has been remaining and is not giving up all the gains from the morning session. So I feel that from Monday we might see that gap up opening would be converted into a run-up-big gap and but moving on the higher side. Regarding with the shorter term bet has been considered, say I'm looking for a month to a couple of month time frame. Stock if I talk about the support and resistance has been considered. So 2,600, 2,550 band is a support. So suppose someone wants to go for a long side in TVS, then keep a stop loss of 2,600 around. Present rate or any dips towards the level of 2,740 can be used to go long. Regarding with the resistance wise, as a target has been considered, we can see stock trailing towards the level of 3,050. Now, if I talk about the Bajaj Auto chart, it has formed the rounding bottom on a 4-hourly time frame, which indicates bullishness. Even the indicator, if you look over, is making the high lows formation. So that is a more promising chart as compared to TVS has been considered. The present rate or any dips towards 10,100 can be used to go long. Regarding with the stop loss has been considered, we can keep a stop loss of 9,700 or 800 around. Target wise, if someone has a view of say a couple of weeks, then the stock can jump towards the level of 10,600, 650. But I'll feel that if someone has a view of say for a month or a couple of months, then it can even try to touch 11,200 to 11,300. So both the stocks look promising, except Hero Motor Corp. If I talk about on a daily time frame, it is still moving in the downward channel slope. So it has to trade above 5,560. So we can see if that thing breaks, then it might touch 6,000 odd level. So it's very hard. So if I compare all the three, the promising chart would be Bajaj Auto followed by TVS followed by Hero MotoCorp.
Right. Okay. So sticking with the theme of auto and two-wheelers specifically, let's talk a bit about Ola. Jeffrey's note today talking about how Ola's market share has fallen 13% since Q1. Puneet is standing by to break that down. Puneet, it was quite astonishing to see that figure. I mean, it's a month of their listing, and of course, the listing was very good for Ola. But what explains this huge slide in market share?
Well, the headline has to be Ola's market share is falling, and the key question to answer is who's gaining from this, and it's definitely Bajaj Auto. We'll get to the numbers in a bit, but let's see why that sales has happened. So we've seen a very positive sales trend post the FAME 2 as well. The sales trend has been largely positive for all players. So if you just can quickly go through what the sales growth has been for Ola Electric as well, roughly around 115% in this month. And that trend has continued from June as well. When you move on to TVS, their growth has been slightly subdued in June, but gain again in July. But the most important factor here is the Bajaj Auto sales numbers. When you move forward, look at the growth in all 3 months, and this is despite March having been very strong for Bajaj Auto specifically. They've grown roughly around 100% in April, 200% of sales growth in June, and specifically in July also that trend has continued. What led to Ather, on the other hand, has not performed very well. But the three key reasons we feel that, this market share change for Bajaj specifically has happened. And when you look at, the market share data specifically on the next slide as well, Ola's market share down from 46% to 33%, while TVS has maintained. The main thing is about Bajaj Auto, up from just 11% a couple of months ago, and it's gone all the way to 18%. Ather has also grown by 50%, but not as much as it should have happened because they got a head start on TVS as well as Bajaj Auto. But specifically, what would have led to this particular growth is, of course, cheaper variants launched by, the OEMs, including Bajaj as well as TVS. Bajaj Chetak now comes under rupees 1 lakh at just 95,000 odd rupees. That's also led to a strong volume growth over the last couple of months. The other reason is deeper penetration by these legacy players. Both for TVS and Bajaj, they've increased their presence in the number of cities as well as PIN codes. Now it's almost there on 400 odd cities, as well as dealerships that they've inaugurated in this particular last 12 months, specifically for Bajaj Auto, are almost like a J curve in sales. They were behind the curve with TVS, but they've caught up with their products as well as dealerships. And finally, customers now having a larger choice as well. Earlier, it was just around Ather and Ola. Now, legacy players are getting into this particular market very deeply. We are going to be also seeing a launch from TVS in this particular quarter as well. And Bajaj has specifically mentioned that they are looking to increase their penetration further in the alternate fuel market. So the CNG bike also comes into play. So this could be one of the few reasons why we've seen Bajaj Auto racing up today as well as TVS on the back of the launch yesterday. But overall, for the two-wheeler market, it's not just about EVs, it's also about the ICE scooters that we've seen from TVS, but Bajaj also gaining foot in the scooter segment that they've largely been absent over the last decade. Back to you.
Well, Bajaj Auto top gainer on the Nifty 50. Thanks for that, Puneet. Really breaking that down as to why Ola's loss is Bajaj's gain. And that's exactly what seems to be playing out even in the markets today. But let's switch focus. Markets regulator SEBI has barred Anil Ambani and 27 other entities from the market for 5 years for diversion of funds from Reliance Home Finance. Ambani has been barred from being on the board of any listed company as well. My colleague Sajid here with more on that.
That's right. In a conclusion of the investigation into Reliance Home Finance, the market regulator, Securities and Exchange Board of India, has come out with the final order, which has barred Anil Ambani and 27 other entities, which is the group entities, along with individuals, from accessing capital markets for the next 5 years. Anil Ambani, who is also chairman of Dhirubhai Ambani Group, has also been barred from being on the board or being any key managerial person of any listed or associates or subsidiaries of any listed companies for the next 5 years as well. The entire bar is based on the investigation undertaken by SEBI after complaints on siphoning of funds where which went to the market regulator, and the market regulator initiated an investigation which included looking at the forensic audits which were done in Reliance Home Finance and Reliance Capital by other agencies like the PwC and the Grant Thornton. As per the SEBI order, what the regulator has found is that Anil Ambani was the mastermind of fraudulent scheme which led to dispersal of funds from Reliance Home Finance to various entities. In many cases, these entities were not eligible to get even loans because of low cash flows or lower net worth criteria. Roughly around 8,800 crores of this loan was diverted to group companies and related entities there. This entire fraud was orchestrated by Anil Ambani along with key managerial person of Reliance Home Finance. In couple of cases, the regulator found that even though there was a board decision not to lend further to many of the entities related to the group, this was overlooked and bypassed by orders of Anil Ambani, who was chairman of the entire group there. This is it also brings into fore the fact that Reliance Home Finance went through a bankruptcy process, and at the end of that it was sold to another entity which is there. As a result of the entire investigation and the order, there's a bar of 5 years for Anil Ambani and others for 5 years in the capital market, and another 5 years for being on the board or on any of the companies which are listed in and under the regulation of SEBI there. He's also been fined nearly 25 crores as a penalty. Of course, there is a provision for him to go and appeal against the order at the Securities Appellate Tribunal.
All right, let's just take a look at some of those group, the stock impact of that SEBI news, Reliance Infra, Reliance Power, some of those that have been impacted today in trade. But fairly big story, Reliance Infra nearly down 10% over there, and Reliance Power also seeing 5% lower circuit as would be expected. All right, Dharmesh Khan joins in on the conversation of Chola Securities. Brijesh Singh is of course with us, our technical analyst. Dharmesh, welcome to you too. We've been talking about autos this afternoon because that's really the only buzzer in the market. Are you constructive on auto?
Yeah, good afternoon, Tamanna. Not at all. Yeah. I think the valuation, not at all.
Not even the two-wheelers. Not even, that's refreshing honesty. I love refreshing honesty. Not even two-wheelers, not even Bajaj Auto, nothing. TVS because of its Jupiter launch.
I mean, these are all just a trigger based on news flows surrounding them, or the buzz which is because new launches, their excitement is there, 2, 3, 4 percentage point. Because if you look at the valuation multiples, they all are, sitting at pretty high valuation multiples, and growth trajectory going by Q1. I mean, couple of them, Bajaj Auto was in a double-digit kind of a volume growth, but other than that, most of them were on a mid to low single-digit. Q2 would be further difficult. So our sense is 7 to 9% kind of a volume growth would be feasible for them. And, competition is intensifying. So that will again keep the volume growth in a limited space. So given the kind of run-up the stock prices have, at the same time, top line growth won't be there to that extent of double digit or, high teen kind of a growth won't be there. And you will have margin compression playing it out. So the base effect of commodity, the inventory, high inventory cost because of the flare up in the commodity prices, the month of April and May will play out in this quarter. So overall, I do think that just does warrant a correction, and after that we'll see. I mean, Q3 we'll see whether to take a fresh call or not. So presently we don't have any buy recommendation on any of the automobile stock. Only exception being Tata Motors.
Okay. Sorry, just out of curiosity, Dharmesh, not even a Hero, because that one's trading sub 30 times earnings.
Yeah, exactly. Not even a Hero, because see, the noise is that the monsoon has been good, but if you look at the actual texture of the monsoon, that was not so good, because where it has rained in excess of what was required. So there were many disruptions because of flooding and all. And then certain parts of the country, particularly the heartland, Eastern India, Central India, and the Northern India, the rainfall has not been good enough. So, and Hero caters to the entry level segment. So I have my own doubts regarding their volume growth trajectory going forward into Q2. So Q2 is in a spot, and thereafter we'll see how the sentiments pan out.
Okay, so very candid view there. I just want to quickly take Brajesh's view on the indices as we go into the closing session and your top technical stock picks over here before we move ahead.
So, Tamanna, if I talk about the indices, Nifty has been trading near the sideways today. The session has been on the consolidation base. Still trend is positive. But I don't feel right now that Nifty would be able to break to 24,700 mark. It should hold on. 24,600 where another support lies. So 100 point down the support is still been intact. Resistance wise, if I talk about immediate resistance lies at 24,920, 24,930 band. So it is just like 100 point upside, 100 point downside, but still trend has been positive. And if we are surpassing the level of say 24,930 mark, then we would be making a new high and we would be entering towards the zone of 25,300 or 350. That would be the level of the resistance for the next Nifty has been considered. Regarding the bank Nifty has been considered, still trend has been positive. We were been trading in the range of say 50,000 or 49,800 on downside, followed by 50,600 or 700 on the 700 on the higher side. That has been broken and still trading on the above this range. Immediate suppose lies at 50,600 to 50,700 band. Resistance, if I talk about, then 51,260 is the first hurdle, followed by the 51,400. So I am looking for 51,400 mark for the index here, for the bank Nifty is being considered.
Okay. All right. Let's go across now to Nitin Bhasin, Head Institutional Equities at Ambit. We spoke, Nitin, a couple of days ago, yesterday actually, on the conference in Singapore, and would be interesting to know. We had a detailed conversation. Would be interesting to know how it has panned out and whether the focus that you've seen of the conference, which is identifying the next big ideas and stories from India, how that has really flowed through.
Thanks a lot for having me again. I think clearly, we touched upon this yesterday, that the interest of the investors remains high, especially Singapore, given that over here investors have been investing in India for a fairly long period of time. People were very excited to meet a few companies in the NBFC space, whether it was long onlys, new asset managers, or emerging market asset managers. Few ideas in the realty space, in the NBFC space. They perhaps were one of the most followed companies amongst the investors. And questions around consumption or quasi-consumption stories were high. So I think that way we think the conference was successful. I hope investors would have found 2 or 3 ideas for each of them, which are worth pursuing or investing in the future.
Right, Nitin. Hersh also joining in. Quick thoughts with regard to NBFCs, because that's been a space which has had a relatively muted performance in comparison to the larger market. You are suggesting that investors are interested in this space. Any thesis behind that? What's the positives that you are seeing?
I think it could be, some certain specific segments of the NBFC. So we had a few unsecured lenders, we had a few housing finance companies, we had a few insurance companies, etc., participate in the conference. So questions around, does the present real estate cycle lead to a lot more demand for the housing finance companies? Questions around medium and small enterprises, lending MSMEs. So we are recommending that the investors need to be selective in each and every sector where there are scalable companies, like a few that participated in our conference. So we found that even for the presently companies like Bajaj, which are going out for fundraising for their housing finance company, investors are keen to understand what's changing on the real estate cycle, along with it in the housing finance company's opportunity right now. So whilst we are highlighting ideas, investors are trying to understand what does the real estate cycle mean for that.
Nitin, I didn't hear pharma. Was pharma at all, chemical at all spoken about? Because that's one sector, at least chemicals more than pharma now. Pharma has made a good rebound. But chemicals has been a sector which has had, of course, its set of problems and headwinds, but could be turning a corner. Anything around that?
Unfortunately, we didn't have many companies from pharma or chemical participate in the conference. So hence the discussion around ideas over there, though the discussion around capital goods companies, electronics companies, perhaps even rural plays, if there was a turnaround impending near term, those sort of questions perhaps were a little bit more, especially given what FMCG has done over the last 3 or 4 months in performance versus capital goods. I think that was another question that was, multiple times discussed with the investors, where we have been highlighting for the last few months a tactical idea in FMCG, whereas we've always found capital goods very expensive. So people said, now what? So I think that is the another question ruling on the mind of investors in this geography.
Nitin, hi. Just wondering how you're looking at the recent run-up in two-wheelers. And, auto, most are constructive on that space. Wanted to know your view, even as you look at the new growth stories.
Well, our analyst is pretty much, saying that you have a story of the two-wheelers, but which needs some bit more legs than just simply what we've seen in the last 1 year or 6 months. We need a considerate improvement in the rural demand. Perhaps that is still awaited. So we are not sort of all gung-ho on the sector right now. A few buys and few sells, but wouldn't want to hazard a guess which one's better than the other. So hence, we like Eicher Motors over the others presently, or we like Mahindra and Mahindra over the other four-wheeler OEMs.
Okay, so sort of a nuanced response on what's happening in auto, and that's really fair enough. What about the financials, Nitin, while I have you here? Because I think the excitement about financials is dimmed a bit after the Q1 numbers. Do you concur that we need to see something really change in terms of deposit growth, etc., or is this the new normal?
Clearly, I think the deposit growth in India, is one of the questions that's ruling everybody's mind, and hence perhaps it controls the credit growth also in the country. And the big question that everybody was seemingly asking us over here also: will the RBI cut the rates? Will it cut the rates in the near term or not? What does it mean? We have been for the last few months being constructive about the banks as a sector on a relative basis to the entire market, given that we find that banks overall may be facing some sort of a NIM pressure because NIM pressure in the near term, but compared to the profitability shares that the banks enjoy right now versus most of the other sectors, valuations are in favor of banks. Perhaps that consensus view of ours or the markets still not leading to the bank sector outperforming the markets by a reasonable margin. But still, we maintain that banks are a place where there are more profits. And incidentally, in our large cap ideas, perhaps 1 or 2 banks are always there for the last quarter or so, especially something like an Axis Bank or an SBI.
Okay, Nitin, just with regard to FI flows and just trying to leverage on the fact that you're sitting in Singapore, you must be meeting as well as speaking with a ton of investors there. What's the investor interest in India like? Within the Asian basket as well as the global basket, how interested is the foreign investor in investing in India? Not just necessarily sectors, but just the general theme of India, because we've seen so much of FI money come out of India. What's the sense you're getting?
I think that's the biggest thing in everybody's discussion right now. A few investors were of the view that what if we were to look at interest rates come down in the US? Will that sort of a thing lead to more flows into EMs? Despite India's good run-up as a market, we haven't yet seen FI flows. Perhaps India still sees flows alongside how the money flows into EM. So some of the investors who are larger EM investors are perhaps waiting. If the EM starts getting flows a lot more, India gets benefited out of that because till now EMs were not performing. Perhaps India was also not getting its fair share of flows despite other EMs not doing good, but India doing good. Clearly, that's something to watch out for in the near term, what happens to the EM overall flows. Separately, I think India as a separate asset class is also being considered by many of the EMs, or most of the EMs having a larger allocation to India, which have been seasoned investors investing into the country. But to the larger flows, still waiting for how the flows out of the US work. If US loses flows, EMs get flows, and what does that do to India? So clearly sort of excitement, but not that clear signs of flows reversing for India or going back to the levels what we would want them to be given our market and our earnings trajectory as a country.
All right. Thank you so much, Nitin, for speaking with us, and great to hear from you, and hope to catch up with you soon again. So that was the Ambit conversation, and the view really on various sectors and how FII flows will come back to emerging markets. Completely flat market. We're taking a very short break, but while going into that break, listen into this conversation or this comment really from SBI Chairman Dinesh Khara, who says that banks are in a position to support loan growth.
We are in a position to support our loan book growth well. So I think so long as we can support the loan book growth well, I don't think so we do have any challenge. But yes, we can support our loan book.
And depositors should expect better returns?
We were having a huge investment book which is to the tune of about 16 trillion. So we are unwinding part of the excess SLR which are having, and we are deploying it for our loan book, where our yield on advances happens to be better than the yield on investments.
Welcome back. You're tuned in to India Market Close here on NDTV Profit. I have with me Agam, who breaks down the FNO Qs as always and is standing by today as well What's the F&O data indicating, Agam?
Well, it's consolidation largely, Hersh. That's exactly how things have panned out through the course of the week, and that's exactly what we're getting this Friday afternoon as well. It's been a very, very quiet afternoon. In fact, for the second straight day, we see the Nifty hover around 24,800, and where we are looking at a little bit of positions building. It's unsure whether or not towards the long or the short side. Moving on to the Bank Nifty, again, the picture is not very different, marginally in the red. The open interest has also declined by just a tad bit, by around 2.5%. As we move into this upcoming week, when it comes to your options market, a lot of activity continues to be around 24,800, given the fact that the Nifty has continued to be in a very tight range. On either side of the range, we are keeping an eye on 25,000 on the higher end and 24,500 on the lower end. Talking about stocks, again, it's largely shorts for Ramco Cement and MGL, but besides that, a good amount of longs building in for Bajaj Auto as well as Interglobe Aviation. And among stocks which are seeing unwinding, we have largely a lot of long unwinding for names like Exide and Chambal Fertilizer. Not too much to speak for when it comes to the spot prices of India Mart, UPL and Dalmia Bharat. All in all, a fairly stable day of trade where, range-bound trade continues.
All right, range-bound trade is the name of the game. I think it's best to look at what can be your outlook for next week and what really changes next week. Dharmesh Kant, I think one factor which will perhaps be an impetus to markets on Monday would be the comments from Powell in the Jackson Hole Symposium, though it's unlikely he's going to say something he hasn't earlier. He'll probably come and say, oh, right, maybe time is right for rate cuts, but we want to look at the data first. So, really, what do you think is the next big trigger that we could see in the markets Monday onwards? And how should investors play this very range-bound and sort of sluggish behavior that we've been seeing?
I think now this market is more of a stock-specific market than, a blanket sector or index market. Even within sectors, you won't see every company moving up. So now that fine shredding between quality stocks, quality earnings and growth will be done. And to my surprise, it will be very hard to find companies where, earnings growth can meet the current valuation multiples at which they are trading at. Because we did a top 500 market cap company analysis, and to our surprise, we found that almost 30% of the basket, irrespective of the category where they were bracketed in, it came out with a negative earnings growth. And the outperformers were only 35 to 40%, and balance was midway. 4 or 5% is the year-on-year earnings growth which came on a whole for the entire 500 top market cap companies. So a difficult market to be in. The only thing which is a saving risk for this market is the liquidity will protect it from crashing. So there won't be a very sizable correction happening in the market that the way liquidity is flowing in. We are seeing how the bullies are happening and that kind of queries we are hearing from the client. So one has to be, if you want to generate returns, say 1 month, 2 months, 3 month kind of a time frame, you have to look forward to companies where some elbow room is still there.
Yeah, I know. I suppose you're right, Dharmesh, it's going to be stock specific. Coming to that, Brajesh, just want to know what your view is on Nykaa. I mean, no clear fundamental reason for the kind of run-up we've seen. There is the early investors are exiting, and we will get details, I suppose, on who really is coming in and whether they're marquee investors coming in. That's probably one of the reasons stock is 7.5% up. But in terms of charts, do you see a further upside?
See, if I talk about the Nykaa, the rally from a level of 149 rupees 75 paisa, that was a low on 4th of June, the election day. From there, we are seeing stocks making higher tops and higher bottom formation. Even in the recent swing, from the 21st of August, we are seeing stock volume breakout has been witnessed with the price breakout. So in today's session also, we are seeing stock making a new 50-week high. Previous swings high has been broken. Now it's been trading above above 222 zone. So 226 around is in trading. Immediately support is 222 followed by 213. I still feel purely from a chart point of view, still stream has been left. Immediate resistance line at 240 to 242. And if it can even further go towards the level of 270, but for that 270, it would be taken as a for a couple of months. But for a very short term, say for a week or for a couple of weeks, then 240 to 245 would be the zone of resistance. So even one can play at the present date with a stop loss of 222 or say 230.
Dharmesh, just your view on Nykaa, and all block deals are becoming a huge trigger in the last couple of sessions. Nykaa, Tata Tech, Ambuja, some of those stories here, and Nykaa specifically, fundamentally. What has changed here in a stock that has really missed out on a lot of the recent rally?
So no, nothing has changed fundamentally. In fact, Q1, if you look at it, it was a bit of a somber kind of a quarter for Nykaa. The high promises were missed in Q1 numbers. But the market is taking a cue from the block deals. The appetite at which the block deals are getting executed, not even a 1 or 2% kind of a discount, and huge chunks are just being taken off the shelf. And that is where the HNI group and the retail group is jumping into the play, thinking that there's appetite and there's a valuation comfort out there. And this is being played out. So one is the supply is being absorbed very, very easily. The demand is too high. And the second factor is this momentum is getting, driven into by the retail and HNI segment. So that is the all tactical play which is happening. And valuation-wise, I don't find comfort in, Nykaa at this level because they are now facing competition, and the slowdown in the growth run rate of Q1 but did reflect that.
Right. One real newsmaker, at least over the last month or so, has been PCBL. 82% returns over the last month. Of course, Varsha highlighted it was 75% plus to me earlier today. And the stock is zooming in trade today as well, up 11% in trade. Now, why is it zooming? We've had an investor presentation come out. No really moving commentary, but just more of the same positivity that, that the company has spoken about. Varsha, break this down for us.
Thanks, Hersh, for that. So your stock is buzzing post-investors day, which could potentially be leading the stock more. But we have seen this rally in the past 1 month. Stock is up more than 75%, as you rightly said. In last 5 days, if you see, stock is up almost 20%. Now, what does this company do is they produce carbon black, which is used to strengthen the rubber in the tires, and they also make specialty chemical as well. Now, let's see what has been driving this stock in last 1 month. So, if one is aggressive capacity expansion across segments. So their current carbon black capacity stands at 770,000 tons annually. They plan to increase it to 880,000 tons, and the capex plan also includes specialty black capacity of 112,000 tons. Now do note that the margin in specialty black segment is higher, which may lead to margin expansion for this company. Also, they recently acquired a company called Aquafarm, which made an entry into water treatment chemicals, and management is optimistic about future growth in this segment. Aquafarm capacity expansion, they want to increase it to 38,000 tons in the next 6 to 8 months, and they have a long-term capex plan of around 3,400 crores over the next 5 years. Management has given volume growth guidance in carbon black of around 11.5 to 12% over the next 4 to 5 years, and they are expecting EBITDA margin improvement due to yield improvement initiatives, operating leverage, and the increase in the specialty black segment, that is the value-added product. They're targeting 5-fold increase in bottom line over the next 5 years through capacity expansion and strategic initiatives.
Varsha, but why has it increased close to 75%? Why has the stock price gone up close to 75% in a month? What is the trigger there?
So in Q1 FY25 con call, they mentioned that they want to increase the bottom line 5-fold in the next 5 years, and they're increasing their presence into value-added products and specialty carbon black, which has higher margin. So good uptick in net profit over the next 2 to 3 years, and also in increase in the margin. That is what Street is liking.
All right. Keen to know Dharmesh and Brajesh's view on Philips Carbon Black. I mean, this has just been a one-way rally as far as the stock is concerned. Dharmesh, first, let's start with your take.
Tamanna, I will give you a qualitative kind of a view rather than a quantitative. Because see, one trade which is playing out in this market is wherever the management is sounding very confident and they are speaking about capacity expansion and increasing the profitability in business multifold, and the reason for that is why they are doing capacity expansion is taken up by the market. That trust factor is there. And one of the key reasons why this trust factor is there is the China Plus story is actually playing out. So that business flow has been there. So that is where the entire valuation discomfort starts happening, because too much money starts chasing the stock and there's a price upset. As of now, the way after this surge, it's trending above its historical averages of +1 standard deviation on the valuation multiple. Commissioning of plant and everything will take its own sweet time, and whether this profitability will actually materialize or not, the time will tell. But this factor which is playing out in the market is management should sound confident about the business prospects, and things are being lapped up.
So PCBL, I get your point about the confidence of the management spurring the stock, and more about who is running the company and what their plan is. But on the charts, Brajesh, the stock has run up 82% in the last 1 month. If you're holding, is it time to exit?
So I'll say, first of all, I would be saying book a partial profit in it and keep a trailing stop loss somewhere around 420, 425 zone. If we see a chart, from a daily point of view, we are seeing the parabolic curve, and that too with the volume, and the volume has started from a month of July onwards. And if we just draw a 2 Fibonacci retracement, the previous swing high that was of 343, that was in the month of Feb. And after that, we have seen stock making a correction on 3rd of June, making a low of 209, and just draw a Fibonacci retracement. 161.8% retracement value comes around 426. Now 260.18% value comes around 559. So present, suppose someone wants to buy, I would be suggesting not to buy. The present risk reward ratio is not in the favor. If it comes a correction of say 50-60 rupees, then only look for a buying with keeping a stop loss of 420. If someone has bought it, and so I'll say at least book partial profit, keep a trailing stop loss of 420, hold on. The next level to the resistance would be 560. If we are surpassing this level, then another level of resistance would be 620 also.
All right, let's move on. Actually, let me stick with you, Dharmesh. CDSL up 8% on the back of a 1:1 bonus. Stock trading at 70 times. Just your quick thoughts, risk reward. Of course, I understand it's a sort of a monopoly or a duopoly business, but just your quick thoughts on this.
Harsha, if you look at the business model, it's more of an annuity business model, fully insulated from any revenue loss or risk related to that. And we are just doing a study on the entire broking business and how it is going to shape up for the next 5-6 years. So we have seen our demat account surge of almost 4x in last 6 years. From 19 it was almost 4 crores, it has gone up to 16 crores. And addressable size of the market as of now is around 48 to 50 crores kind of a demat account. So we are seeing almost 3-4 jump in the demat account in next 6 years. It's likely to be a scenario. That is what the prospective size of the opportunity is. Having that in regard, and if you are having a view of say 5 or 6 years at least, then CDSL at 70x is still cheap buy. I mean, monopoly business and all is already there. So, and there is nothing to lose on this count. So if you are just staying invested, it's a safer bet. But if you are just looking for short-term, 3-4 months kind of again, then I doubt how much price uptake can happen henceforth.
Brajesh, what would be the call for, I can't say rest of the afternoon, but like a call for Monday?
So there are 2-3 calls which look promising from a chart. All are from a buy point of view. I'll start with BTSC sort of thing. Then then Alcargo looks good on the chart right now. 71 rupees 35 paisa around the stock has been trading. Present rate can be used to go long with the stop loss of 69 rupees. Play for the target of 75 rupees. And if it cross 75, the next level to watch would be 77. And another counter for the BTSC would be Wellspun Living. In today's session, we have seen stock making a new 50-week high. Even the volume record has been witnessed. Our chart still indicates more upsides left in the stream. followed by the daily chart. 197 around the stock has been trading, keeping a stop loss of 194, with a target of 207, 209. And then another counter would be HFCL. Daily, on an hourly chart with high top and high bottom formation, volume breakout indicates upside, another upside of to the level of 156. Present rate can be used to go long with a stop loss of 146.
All right, these are some of the picks that you can see for tomorrow. Now, meanwhile, we had an interesting conversation today with Goldman Sachs' Sunil Kaul, talking about what sectors are looking really constructive for GS. Listen in.
We still like the domestic sectors in India, and so we are overweight things like autos. That has done very well for us. I mean, but that's a position we still hold. We are overweight industrials on the general sort of continued focus from government on infrastructure, and obviously that got reiterated in the budget. We still like some of the defensive pockets, including telcos with the tariff hikes. So we do like insurance within the financials as well as a defensive place where a lot of the regulatory headwinds are behind us. So I think in general, our preference continues to be kind of domestic sectors or some of the external facing sectors. And then we also like a lot of the thematic pockets in the market, including the themes of sort of agri and allied industries, the theme of clean energy, or the energy security in general. Defense is an area which we have been emphasizing. And this sort of broader theme of sort of Make in India, PLIs, that's also something we have been reiterating. So I think beyond the headline index, where the broad view remains that the market still goes higher in 12 months on the back of underlying earnings, and we have a 26,000 target on Nifty, I think beneath the headline index, I think there are a lot of these thematic pockets which we think will continue to have stronger interest over a medium term.
Well, still constructive, still positive on Indian markets, but one of the stocks that's absolutely tearing it in trade today, SCPC. They've received final acceptance certificate from the Hooghly Gold Mines, and we have Anushi bringing us all the details on this one. Anushi, 18% higher.
Absolutely, Harsh. As you said, the stock is on a tear in today's trading session. Now, this is after the company has received a final acceptance certificate from Hooghly Gold Mines for a contract worth 232 crore, which happened in place in 2013. So this is a old back contract for which it has finally received the acceptance award. This pertains to construction of new circular shaft with complete winding installations. And again, the systems and all are now in place with one warranty, which was in the contract, now been completed over here. So this is the one key update that we are looking out for SCPC. But in other key updates also, the stock has been buzzing. This is after its subsidiary also received a 2,700 crore of a cement project from an Uzbek firm, and this involved a construction of a 3 million ton greenfield facility over there, with a project to be executed in 30 months. So two key developments taking place over here. If you look at its Q1 results, revenue was up about 23%, while margins improved to 13.77% as compared to 8.91%, and net profit saw about a 1.6x jump. So in the last 1 week, a 36% of a stock price return that we are seeing, while in 6 months and 1 year, 16% and 80% of a stock return that we are looking at for SCPC, and why it has remained in focus.
Okay, thank you, Anushi, for that. Dharmesh, let me come to you. Any interesting names in the EPC stroke infra kind of plays that you are looking at?
Not exactly, but we did have rolled out a report on, say, finding value in this kind of a market, where we talked about Narayana for the LA, where we find value, and on a peer comparison basis, it's still cheaply priced compared to Apollo Hospitals and the like. And the only issue about the capex not being coming to place, so they have announced an aggressive capex plan for the next 3 years. And the health insurance business, where the concern is there, we don't think that's a concern at all. So that is a buy to our mind, with around 20-25% upside from year's target. Same is the case with Natco Pharma, where the numbers have been pretty good, and trading at 56 PE multiple with an ROE in excess of 30%. And the peer group itself trades at 33x kind of a PE multiple. And couple of from the public sector banking space like Bank of India and Canara Bank, where the numbers were pretty fine. So these are the 4 or 5 stocks where we think in this market, if one is getting invested into an SIP model, a good reasonable return can be generated over say a 1 year period of time.
Okay. Thank you so much, Dharmesh and Brajesh, for joining us on the show today as we wrap up this week's session. Just about 2.5 minutes odd to go for the markets to close. And we're looking like we're going to close pretty much flat. That's been the name of the game and the theme really that we've seen all through most part of the week today and through the trading day as well. Just about 27 points up. 24,800 is the level where we have stayed steady. But having said that, and just as soon as we close, we'll pull up the week-on-week chart. It's been a slow and steady inch up as well. So the week's not been bad if you look at it from that perspective. Let's just pull up the heat map before we go into the absolute closing minute and talk about, I think, the star of the day and shining even brighter considering nothing much else is happening would undoubtedly be Bajaj Auto. Auto stocks and two-wheelers specifically among that. Bajaj Auto doing exceptionally well in trade today, nearly 5% up. We had a very detailed piece from my colleague Puneet a short while ago that talked about how a lot of the market share that Ola Electric has been losing seems to have gone to a Bajaj Auto. So that's doing well. Tata Motors is the other one, M&M, Hero Moto, some of the stocks that are really on the winning side. On the losing side, an ONGC seeing pressure about 1.5% down. Remember, crude prices are trending downwards for a variety of reasons. Among them is also increased EV adoption by China. So that's an interesting story to track. Divi's, which has been holding up its own for a better part of this week, is seeing some profit booking today. But all in all, Hersh, I would say it's a flat market trending towards negative, because even if let's just also pull up the advanced decline ratios, and that's pretty much where we have seen it move, and there you have it. It declines a little ahead of the advances, and overall you would say market breadth has been negative, not massively negative, but yeah, trending on the negative side. Cautious trade, I suppose, ahead of hearing from Mr. Powell at the Jackson Hole Symposium.
Yes, that, but also on the back of what's been a very strong week otherwise. We've always seen advanced decline, at least pretty much through the week or most of the week, being strongly in favor of the advances. So maybe a healthy bit of flattening of that of sorts. Maybe that's really playing out as well.
Not too much of a difference though. It's not even a flattening. I think let's pull out week on week what's been happening if we can, and that actually will put things in perspective.
Yeah.
So yeah, this week on the Nifty. So again, about 1% up.
So
at these levels, it's been a good week if you look at it.
It's been a strong week, yes.
Yeah, just the mid-cap and the bank Nifty as well is what I want to pull up. So, that gives you perspective. Sometimes slow and steady does win the race. Not bad for the bank Nifty as well, over 0.5%. And let's see what the mid-cap has done. This week over 1%. So the broader markets have actually been fairly strong.
And it's dipped 0.5% today, Tamanna.
Yeah.
So essentially it was up 1.5% at the start of day today. It's dipped 0.5%, just to kind of put it out there.
Yeah, no, absolutely. I think I don't know if you can pull up Nifty
there you
Auto.
Go, 3% on the Nifty small cap. Yeah. So that's broader end of the spectrum has done fairly well. So the advanced decline overall for the week, most stocks have advanced.
Yeah. Nifty Auto is a today's story more than anything else.
Yes.
And I think reality stocks is the only last one I would pull up very quickly just to give you a weekly picture, because reality stocks, the Nifty reality perhaps would be showing some pressure this week. Yeah, down about 3.5%. So that's the big picture, but fresh start on Monday. For now, that's all the time we have on the show. So from Hersh, me and the team that put it together, thank you so much for watching. Stay tuned. A lot more coming up on the other side.